What is up, ladies and gentlemen? Happy Wednesday. I hope you're well. And it is the middle of the week. So something to note is that on Friday, tomorrow's Thursday, Friday, we have at 8:30 a.m. a critical economic data coming out. Okay, we have a non-farm employment rate or change, and then we have the unemployment rate. And this all will tie back to the labor market, the health of the labor market, and what the Fed is expecting in regards to their tapering program or the end of their tapering program. So pretty important to keep our eyes open to that, because that will, in a way, tell where this market will start heading towards. Okay. So yeah, pretty important there. And also, earnings is upon us. So our favorite season of the whole wide world, earnings, is upon us. So don't forget that too. All right. So I made a quick yesterday when we discussed, we were looking at we were looking at the zone. Okay. We were looking at a possible wave one completion at this level here. Okay. So I'm going to review with you and tell you guys why I made this adjustment. So in looking at this wave count, right, yesterday, we were looking at this as an A wave down in B. Okay, and then we were gonna make the C wave somewhere here. All right, that was the idea yesterday. However, today, and before we continue to that, right, in our bullish interpretation, which let's just dive into that one, right, instead of just showing you that, because that is a bit confusing. So in our bullish interpretation, okay, we were considering the fact that if we were to retrace the entire move of October the 5th, okay, and broken this low at 426.33, then the chances of further downside were already open there, because then our targets to the downside would have met the 100% extension, okay, at 418.66. Those are our downside targets. However, that didn't happen today, and we ended up holding support at the 786, between the 618 and the 786 retracements, okay, of this overall wave one advance. Not invalid, not out of the question. It is a little bit deeper than usual for a wave two pullback, but it's common. It's not common, but it's not out of the question, is what I'm trying to say. Okay, now given the fact that we held the zone as support, and we are looking to be making the characteristics, rather, or the signs, the thing, whatever you call it, of a 5-wave impulsive structure developing here, it is what's giving me a bit of a hunch that perhaps, just perhaps, October 4th was our low from this correction. Now, it wasn't a correction from the entire COVID lows to September the 2nd of 2021, because for that to happen, we would have wanted to see price action fall further. Okay. I mean, it can still happen, right? But we want to see a market keep on making new lows. Now, this is what I want to point out to you guys, okay? Corrections are often very, very, very difficult to track. I know a lot of people are wanting to short this market, but it hasn't given us clear directions or clear entry points. Look at this, guys, okay? Maybe perhaps at the top. And maybe this was a sign. Remember a couple of weeks ago when we had 2 Federal Reserve members selling out their positions for ethical, and I'm quoting here on quotations. I know you guys don't see me, but I'm quoting ethical reasons that they wanted to sell their positions, their holdings, over millions of dollars. And then a few days later, that was the rollover for the market. So how coincidence, right? Unless you were those people who had inside information, because that's what that is, or that's what that was, then you would have caught a perfect dip, all right? A perfect downside short opportunity. But then we retraced, and this, right? This was the retracement that we were looking for, all right, for a wave B, which was fine. And normally that's how you strategize in an Elliott wave, right? You confirm the downtrend, you establish the retracement, and then you start gearing up for a short-term opportunity, okay? But this hasn't been pretty easy to track, okay? What is this? This is really like pretty no man's land, nowhere since September the 20th, right? We technically lined up where we left off on September the 20th. So perhaps this is the market telling us, look, we're not going further down. This is the bottom. Start gearing up and thinking for further upside, because we're heading out to new all-time highs coming soon. Okay, if that is the case, guys, then let's start looking for upside opportunities, all right? And this is what I will be looking for coming into tomorrow and Friday. So I want to see this high being broken with ease, right? Because we have the makings of the wave one, down in two, maybe this is another one, down in 2, and then 3, okay? Or 1, 2, 3, 4, and then the final 5th wave. A pretty brief pullback into the wave 2, because this essentially will be wave 1 of the small degree of this third wave, okay, to take us higher, to take us towards the zone 443.28, 437.60, at which point that'll invalidate and break our key, this line, this trend line that we've been talking about for the past couple of days on this channel. All right, so let me show you guys what I would be looking for. All right, so this will be 1, 2, 3, 4, and 5, potentially, right? 5. And then we see 1, 2, and 3 waves, and then the final, and then another push higher, and then the 4th wave pullback, and then the final 5th wave, which I just mentioned. All right, so pretty clear, right? I mean, this is 1, 2, 3, 4, and 5 to new highs, and we establish a support here when the wave 4 pullback potentially retraces back to the trend line resistance. All right, and then we take off. All right, however, on the other side of the coin, all right, let's dive into what could be the bearish scenario. Okay, so the adjustments I made here is that perhaps this is the low of wave 1, okay, and this is the wave 5 of that smaller degree. And now we're in the makings of the wave A, down in B, and we're going to make 5 waves up to the wave C. Okay, wave C of the wave A will come in at 100% extension of wave 1, sorry, of wave A. All right, that's what this will be. Wave C will be equal to the wave A. So let's take a look at where that would be. So we take an extension tool and we measure it from the low wave A to the high of this wave A down to the wave B. All right, and so we want to see the SPY hold below 100% extension. Okay, 436.61 and 435.46. I don't want to see SPY break above those levels, because, well, I do, obviously. I'm bullish. I'm bullish 100% in the market. I'm not a bear. I'm not a bear by any means of your imagination. Okay, if you guys are bears, okay, good. You know, you guys have had good opportunities, but from my perspective, I'm just doing here my analysis and giving you guys my opinions, right? So 100% extension would be our ideal resistance to see the wave C completed, wave 2 completed, held below the resistance trend line, and then we head on lower. And essentially that was what I've been looking for since Friday. Okay, if you guys recall, on Friday when we were here on October the 1st, right, that's what exactly I wanted to see. I wanted to see price action continue on higher, because this would have been A, B, and then C, if an extended C for that matter, right? Come and retest this trend line, but it's likely that that probably is the case over here. All right, so I think it's pretty clear. I think I mean, I've been saying that since Friday, right? It's very clear, and look what's been happening ever since. So I see that the markets, pre-market, the futures are up. Let's take a quick look here. Actually, this is, let me see here. Yes. So we're pretty up. We're up about shy of a 2.22%. So it's not that bad right now. We're pretty much pushing through some of these levels that we're referring to here. So if the markets hold overnight, then that is what's likely going to happen. We will refer back to our bullish interpretation, and we will wait to see how the markets will react after Friday too, because as I mentioned, we have non-farm employment change and we have the unemployment rate for those 2 days. All right, guys, so I think our marching orders are clear. Let's quickly touch base on the Qs. All right, the Qs are also displaying similar opportunities. It's a bit different here, okay? The wave 1 complete on October the 4th. This is A, B, and we're 1, 2, 3, 4, 5 maybe, or 1, 2, 3 for the wave 2. So just as long as we're able to break above 360.10, then we can start counting the fact that perhaps this is the wave 1, or sorry, this whole cycle here. Where's my C wave here? There you go. This whole wave C, right? This pullback A, B, C has run its course, and this is the making of the first wave. Then the wave 2 pullback, and then off we go. All right, we want to see this trend line resistance hold or break above price action. All right, guys, so that's pretty much it for me tonight. I hope that this is of use to you. If you're new to the channel, subscribe, give me a thumbs up on this video, join Trending Waves. Link will be posted down in the comment section. Thank you so much. Have a good night.